Hello and a warm welcome. You've joined us on Buy Now, Sell Now right here on ET Now. I'm Ashesha Dwaryu. With me is Ankita Saxena. And Ankita, turning out to be another good day for the markets, isn't it?
Absolutely, Ashesha. In fact, since Friday, the big upside surprise that we got from RBI governor, what a gift for the markets and the economy in general. And we, continue our outperformance. Since then, we have a Nifty that had managed to scale the 25,000 levels on Friday, and we have managed to now cross the 25,100 levels as well. 25,135 is where we are perched at very comfortably, Ashesha. In fact, we're trading with gains of, 0.5% on the Nifty. As far as Nifty Bank is concerned, that's where the outperformance is coming in. In fact, remember, all the rate sensitives are doing very well, especially the banking and the financial pack. The banks are in focus again, trading with gains of 430 odd points, 0.7% gain coming on Nifty Bank. We have scaled the 57,000 levels on Nifty Bank as well. Special mention for the PSU banking pack, which is in focus again. PSU banks have been clear outperformers. Maharashtra Bank, Indian Bank, IOB, UCO Bank, all of these are trading with gains of 3.5 to 4 odd percent. So banks are doing very well. But besides that, Nifty IT is also managing to do very well. In fact, it is trading with gains of 1%. You have Emphasis that is up 2.3%, TCS, HCL Tech, LTI Mindtree, all of them trading up 1 odd percent in trade today. Barring Nifty Realty. Now, Nifty Realty was a top gainer on Friday on the back of that rate cut and the CRR cut coming in. But that has managed to cool off a little. So Nifty Realty is reeling under a bit of a selling pressure coming in with cuts of 0.3%. But barring that, all the other sectoral indices are in the green. Speaking of the broader markets, then broader markets is where the outperformance continues. In fact, if we pull up the charts for small caps and mid caps, small caps is trading with gains of 1.2%, and mid caps are also trading up with gains of 1%. So broader markets also continuing with their outperformance. A slight bit of tick up coming in on India VIX. The India VIX is up almost 1% right now. A slight bit of tick coming in, but largely, as far as the advanced decline ratio is concerned, it is definitely in favor of a clear consensus in the favor of the bulls. So bulls are in charge right now, and it is a good day coming in start of the week, Ashesha.
Well, yes, turning out to be a good day yet again after the solid bump up that we saw on Friday. But remember, this is the show where we answer all your queries, so keep sending them to us. You can send your query on the WhatsApp number that is flashing for you on your screen. Mention the name of the company, the stock that you're holding, your time horizon, your buy price, and we'll try to answer as many as we can over the course of the next 1 hour. And to help us with that, we now have Kunal Botra joining us, and we also have Gaurang Shah, Senior Vice President, Geojit Investments, now joining us. Gentlemen, thank you so much for taking your time out and joining us here on ET Now. But the first question has come in from Amit. He's from Dubai. He says that he's holding 50 shares of Maruti at 12,000 rupees per share. He can hold on for another 1 year or so. So we'll take a fundamental view on this. Gaurang, what will your view be on Maruti Suzuki? It's at 12,528 currently.
Thank you so much for having me on the show. Morning to all of y'all. Before I give the RICO, whatever recommendations that are made are as per the views of our research team. My company, Geojit or I, we do not have any financial or investment interest, nor there is any material conflict of interest. However, we give recommendations to our clients. They might be having their positions in the stocks recommended. As far as Maruti is concerned, well, it's one stock that has been a little bit of rough weather as far as month-on-month numbers are concerned. But if you look at a long-term perspective, our team has a buy recommendation on Maruti Suzuki. I would request the viewer or investor that if he can extend the time horizon from 1 year to a little bit more, because as we all know, the curbs on Chinese rare earth magnets has created a new set of problems for the auto industry, not only in India, but across the globe. Representations are being made to ease out the curbs. So that's one particular short to medium term kind of headwind. Given the kind of product lineup and of course the launches and export market opportunity, our fundamental team remains positive on Maruti from a long-term point of view.
Bullish view coming in as far as Maruti is concerned, but let me come to you then, Kunal. This is Karthik who's writing in. He's writing about CDSL that he's bought on Friday at a buying price of 1,797 rupees. He doesn't have any idea for how long to keep this. So what are the targets maybe perhaps for CDSL?
So, near-term wise, I would believe that you can now look out for targets in the range of 1900, 1880, 1900 for CDSL. Again, depends on your overall time frame. If you've bought at much lower levels and you're looking to ride out the entire trend, I would believe that the scope of the stock to move up higher could be significantly on the positive side. So there could be a possibility that the stock may even challenge to break past about the previous lifetime high levels, which is closer to the 2000 mark. So in this scenario, the best way to try and ride out the trend is to ride out the entire trend by trailing your stop losses and keep on trailing your stop losses at every hurdle where the stock crosses. The next hurdle, as I said, could be closer to 1880, 1900.
Okay, so 1880, 1900, that could be the next hurdle for CDSL. But let's shift focus and let's talk about the cement sector. Then we have a question that has come in on Ultratech Cement. We have Deepak, who has written to us from Kerala. He's holding some shares of Ultratech Cement. He's asking for a long-term view. Gaurang, what will your view be on this stock?
Well, this is one sector actually it's not much spoken about. But if you look at the entire government spending on infrastructure creation, if you look at the real estate sector, which is the second largest consumer of cement that is manufactured in India, and of course the semi-urban and rural development theme in terms of infrastructure. So it augurs extremely well. Our fundamental team has a buy recommendation on Ultratech. Ultratech happens to be one of the largest capacity in terms of cement manufactured. And there is a feeling on the street that we could be looking at a price hike in terms of cement bags. How much, what quantum, when, I think that only time will tell us. But yes, the team is positive on Ultratech from a long-term point of view.
Right, positive view coming in on Ultratech Cement. Coming to you, Kunal, this is Vishal, who's 35 years old, writing in from Ahilya. He says that he's holding HDFC Bank shares 1,300 levels and 100 quantities, and he wants to know if he can add 150 more shares at current levels, and this is for a long-term period.
So, I think it's a good sign that you're holding on to the stock from those 1300 levels and still riding on to the trend. Continue to ride the trend. I'm not sure whether you want to buy the exact 150 quantity at current levels. I would suggest that maybe just stack it up into three different price points, say current levels of 1980 thereabouts for HDFC Bank, and another 30 point, 40 point dip on the stock price is where you may look to add this. So do it in three tranches. You can start at current levels, and every 30 point dip for the stock price, you can look to add further quantity for HDFC Bank.
Okay, so that's the view coming in on HDFC Bank, but we have Prasad, who has written to us from Hyderabad. He's holding 85 shares of Blue Star, which he purchased at 1582 rupees per share. He wishes to hold them for a period of 1 year. So, Gaurang, what will your view be on Blue Star?
Well, so I think the entire white goods appliances, consumer durable appliances has been buzzing for all the good reason. Affordability has now become much easier with respect to the demand coming in from semi-urban and rural India. And with the climate change, I think now ACs are not only used in the summer season, but also for the rest of the time in the calendar year, given the kind of climate change that we are going through. It's one of the leaders in terms of air conditioning, whether it is for residence or industrial purpose. They have got a decent amount of presence. Our research team has a whole recommendation on Blue Star from a long-term point of view.
All right, so that's Blue Star. But moving on to the next counter, I'll come to you, Kunal. Then this is Bhadrat, who's writing in. He says that he wants to switch from Aurobindo Pharma to Granules India, and this is for a longer-term perspective, say a year or so. Do you think this is a better bet to switch from Aurobindo to Granules?
Not sure of the sub-sector compositions within the pharma pack, but I would suggest that there could be better names which could be available, because Granules as it is not a major trending stock. Just some time back I did a link on Dr. Reddy, where on the chart busters I mentioned that the stock is coming back into a potentially multi-month, multi-year breakout mode, at least in terms of indicators. That should trickle into the prices as well. So it's better that you start looking out for switching to formidable pharma names. I would believe that switching to, say, something like Dr. Reddy or Glenmark Pharma could be a better strategy.
Okay, so that's the view coming in on a whole host of pharma sectors, Aurobindo and Granules. But we have Achar, who has written to us from Madurai, Tamil Nadu. He says he's a big fan of both Kunal and Gaurang actually. But Kunal, he's asking for your view on RVNL. He's holding about 1100 shares at 476 and Cochin Shipyard at 1621. So these are the two stocks that he's asking your view on, RVNL and Cochin Shipyard. What will your view be?
So hold on RVNL and maybe book profits on Cochin Shipyard at current levels, and then maybe look to buy this back again once the stock dips a bit lower, because we're seeing a phase where many of the defense stocks, and especially the ones which have been high beta, they are getting into a bit of a overbought nature on indicators. Over the last 2 days, we're seeing some bit of profit booking happening into this pocket. So you have to be a little bit more patient, but I think booking profits over here and then buying them on a gradual declines could be a better strategy. Railway stocks I would be bullish on. RVNL, IRCON, IRFC, I think Titagarh, many of these stocks are breaking out or on the verge of a breakout of their respective 200-day moving averages, as well as some bullish patterns on the prices. So there could be a scope where you might expect the railway stocks to outperform going forward.
Alright, performance coming in on the railway stocks, but with that it's time for a quick breather. Don't go anywhere. After the break, we'll get all your questions answered. Keep sending in your queries on the number that's flashing on top of the screen, and we will get your questions answered by our experts on the other side. Stay tuned. Welcome back. You're tuned into Buy Now, Sell Now, where we are getting all your questions answered by our experts. So don't forget to send your queries on the number that's flashing on top of your screen, your stock query, your buying price and your holding period, and we'll get them answered by our experts. So let's resume with all the questions then. Now this one's coming from Rashmi, who's writing in from Jaipur. Gaurang, she wants to invest 5 lakh rupees for 1 year in the cement sector. She wants to know the levels at which she can enter. Is it a good level to enter in the cement space? And if you can share a pick with her as far as the cement sector is concerned. Now you did mention that Ultratech you are bullish on, but besides that, could you give us some color on that?
Well, honestly, I'm no one to give levels. Levels will be given by my good friend Kunal Botra. I think he's more capable of giving levels and whether it is the right time or the right price. But yes, like I was mentioning, answering to the earlier query of Ultratech, cement happens to be a sector which is likely to do well, perform well, both in terms of consumption and of course price bag, I beg your pardon, the per bag price of cement. The other trigger would be in terms of operating cost effectiveness and efficiencies, which will possibly increase the profit margin. So I think it is always best when you are when you're new to the market, you should not do anything extraordinary. Stick to the basics. Like I mentioned, we have coverage on Ultratech. Other than that, we have coverage on amongst the large cap names. ACC is also featuring under the coverage. Along with that, we have coverage on some mid-cap names which are quite strong. Dalmia Bharat, Ramco Cement. These are some of the investment ideas.
So that's the view coming in on the cement sector with a long-term perspective. But we have Sri, who has written to us from Bengaluru. Now he has about 50 shares of Bajaj Finance, 200 of BDL, which were bought at 1800 rupees per share, and some shares of Bharat Electronics as well. Short-term view, he's asking for a 1-month view. Kunal, what will your view be? 3 stocks, Bajaj Finance, BDL and BEL.
All three of them are a hold from my side, Bajaj Finance, BDL as well as BEL. I think all three of them continue to look attractive. Bajaj Finance, and after almost 2-3 weeks of a stock consolidating, has managed to make a breakout. BEL, Bharat Electronics, I think both of these stocks. So there comes a point where you may expect that the pace of these rally, pace of the rally for these stocks, they may halt a bit or they may slow down. But the trajectory which gets set into these stocks is where you should further continue to ride the trend. So it could be a phase of a pause for many of the formidable defense counters, but I think buying them on declines could be a good strategy, or as well as holding them, especially if you bought them at lower levels. So that would be my strategy for all three names.
All right. Moving on to the next stock, I think this one also Kunal you'll have to take. This is Nikhil Sharma, who's writing from Mumbai. He's an intraday trader. He wants to know, he's bought 100 shares of Crompton at a buying price of 556 rupees, and the target predicted is 300, and according to him is predicted to be 372. Now, would this be the right time to exit the stock or better to hold it? So 372 is the target that he's working with. He wants to know whether this is the right target to be exiting or to hold on for perhaps a longer period.
So you may have to hold on to the stock for a longer period. I'm not sure whether you might probably expect the stock to move intraday towards that 370 plus target range, because the reaction of the stock since the open, and especially in the first couple of hours of trading, has been a bit muted. You saw the stock opening towards a mild gap up, moving towards 356, but then the stock has managed to see some bit of profit booking. So eventually, I think unless the markets start to get into a different orbit of a rally altogether in the second half, I would expect a bit of a muted price action for Crompton for the remainder part of the day. So you might have to hold on to the stock for achieving those targets from a slightly short to medium term perspective.
Okay, so that's the view coming in on Crompton hold rating from Kunal, but we have Akshay who has written to us from Bengaluru. He says he's holding about 150 shares of SBI card, sitting with a profit of about 25%. He has been holding them since 2020. He is asking whether he should book profits in this position and move to SBI or State Bank of India. So that's the question. Gaurang, what will your view be on SBI versus SBI cards?
Well, so the research team has a sell recommendation on SBI cards. Our targets are in place, and hence the recommendation of reduce or maybe book profits. As far as this question, whether he should opt out for State Bank of India as an alternative investment idea. So here again, the research team has a positive coverage on State Bank of India. And our sense is that the rate cuts last week on Friday was much more than what all of us expected in terms of interest rate, more so for the CRR cut, and along with that, of course, the changes that were put in place for the gold loan companies. So yes, if you want to book out from SBI cards and switch on to State Bank of India, from a long-term perspective, it would be a better alternative.
All right, with that, it's time for a quick breather. But before we slip into the short break, a story that's breaking is that in a bid to enhance driver safety
here on ET Now, and this is a show where we answer all your stock-specific queries. But turning out to be a good day for Indian markets, Nifty is now up nearly 115 points, comfortably above that 25,100 mark, and Nifty Bank is also nearing that 57,000 mark. But we have a whole host of queries that our viewers have sent, and we have Vidya who has written to us. She's holding about 100 shares of Reddington at an average price of 151 rupees per share. She's asking whether it is the right time to book profits or continue to hold. She's asking from a long-term perspective, Gaurang, do you have coverage of this stock, Reddington India?
No, I'm sorry. Our team does not cover this one, so I won't be in a position.
Okay, and Kunal, what will your view be on the technical?
I'll suggest to hold on to the stock. Reddington has been one of the stocks which have been a lot more consistent from the 2020 lows. I think, the stock was almost at 30-35. From there, it's almost like a 9x, 10x kind of a move for Reddington. But then in the last, 2 years specifically, 23, second half to 24's entire year, the stock has been a very gradual mover on the upside. So I believe that eventually you would probably expect that the pace of rally would improve, for Reddington on the upside. Since you purchased at much lower levels, I will suggest to hold on.
All right, hold on to Reddington. But moving on to the next counter, this one's for you, Kunal. This person is Vaishnavi is writing from Chennai. She says she's a big fan of Kunal, and she wants to know about Mascot Dog. She's bought 30 shares at 2,218 rupees. She wants to know if she should be holding it or she should be selling this. So what is the target for the next 6 months? The big question on all these defense counters of how they've already run up so much. So at this point, should you be booking profits or you can be holding it for a further upside?
See, I think both could be possible. On the short term, I would expect that these stocks may go into marginal correction, but on the medium to long term, these stocks may make a very strong and dramatic comeback, like what we've seen when you look at this from 2024 highs for many of these defense counters. So it really depends on what's your time horizon, where you're looking to trade for maybe short term gains, trying to book profits over here and then buy back on dips. I think if that's the case which you are okay with, then I would suggest that maybe booking profits over here at current levels for Mascot Dogs around 3,500 range could be a good strategy. But then wait out for that phase where these stocks dip down. So even if there's like a 5% to 10% drop into the stock price, that could be an advantage for you in terms of the zone where you can look to buy back these stocks and then try to ride the next big trend on the upside for these defense names.
Okay, so that's the view coming in on several of these defense stocks. In fact, we have a lot of queries that have come come in on defense counters today. But we have Vedant who has written to us with a question on the IT sector. He's asking for a view on Coforge. He's holding about 420 shares and at an average price of 71 after the stock split. Gaurang, on the fundamentals, what will your view be on the sector as a whole and on Coforge in particular?
Well, so if you actually go to see, there were a lot of fears post the tariff announcement and slowdown in America, recession, etc., and we saw the IT sector correct for all the reasons that we had known. As far as Coforge is concerned, a mid-cap IT company, a consistent performer in terms of earnings. And our research team has an accumulate stance. So, from a long-term point of view, continue to run. Despite of the corporate development in terms of price adjustment, there has been a decent recovery from the adjusted price to the level where the stock is trading. And of course, the outlook for IT sector from our research team is very, very positive.
All right, moving on from Coforge, coming to you, Kunal. This is Tara who's writing from Trichy. She's bought LIC, 100 shares at 900 rupees. She wants to know if she should be holding it or should she be selling it. She's a long-term investor. Now, in the last 1 month, LIC has given a solid run-up of 22%. She's clearly sitting at a profit, but now do you think there could be more upside to this or should she just book out her profits?
See, it's a bit tricky, frankly, because LIC has been one stock which has disappointed post its listing, because there was a point when the stock was at 11-1200, and from there the stock had fallen down consistently, I think for a period of 6 months or so, dragged down to as much as 750-700 mark. So I think in that sense the stock has been an underperformer. Since you've purchased at lower levels, I would suggest that maybe try and book partial profits over here for LIC, and then look to buy back again if the stock dips down to that 900 to 925 zone. It would probably, my sense is that it would probably be seeming like that the stock may get into a time-wise consolidation, because LIC has been a stock which hardly gets into a major sustainable long-term uptrend. It's just that the stock gets into a patchy phase where the stock consolidates, goes into a time-wise correction. I believe that the stock may hit that kind of a patchy phase over here and go into a time-wise consolidation. So book profits at current levels and look to buy back once the stock dips down to those levels which I mentioned.
Okay, so that's the view coming in on LIC, but we have Amit R who has written to us for a view on Coromandel International with a long-term time frame. Gaurang, what will your view be on Coromandel International?
Well, so again, a company which used to be under our coverage some time back. We had a buy recommendation, but post the target being in place, I think we've not initiated further re-rating on the sector. So on the stock, so I won't be in a position to give a specific answer.
Okay, but Kunal, on the technicals, what will your view be on Coromandel International?
So I think it's a very interesting chart. I've tracked the stock when it was almost at 15-1600, 5-6 months back, and there was a phase where the stock was a huge outperformer. So Chambal Fertilizers, for example, was one of the better performing stocks. Coromandel was lagging a little behind, but then in the last 3 months there has been a different divergence where you've seen Coromandel being one of the better performing stocks, made a new high, crossed that 2000 mark, and then 2500 also was recently tested. So it's a stock which I believe has been showing all the right ingredients and signs that this uptrend should be sustainable, as well as it should be more of a multi-year uptrend, very gradual for the stock in that sense. So it depends on the time frame. If you're a long-term investor, I would recommend a hold.
All right, if you're a long-term investor, recommend a hold on Coromandel. But Kunal, tell us about this West Bengal. He wants to know about NTPC. He's holding 340 quantities at 417 rupees, and Power Grid 310 shares for 300 rupees. He wants to know the position for short-term and long-term for NTPC and Power Grid from this power sector.
See, I'm not sure whether you're looking at these kind of counters, or you are looking to build a portfolio around these kind of counters, because both NTPC and Power Grid, they would fall back into that very low beta to maybe slight lower than even the moderate beta zone for these stocks. So you would require a lot of time for these stocks to move up 10-15% on a sustainable basis. So I would probably believe that that just relook at your strategy, include some bit of, say, moderate to high beta stocks in your portfolio. Even if you're looking at this from the PSU basket as such, I would recommend that you can look at the PSU banking pack. That space looks extremely attractive. So whether you're looking at Canara Bank, Bank of India, SBI, depending on your risk appetite, I would suggest that that would be a better space where you can look to start investing at current levels.
Okay, so that's the view on Power Grid and a whole host of other power companies that we discussed. But shifting focus to then, Balan, who's a senior citizen, has written to us. He wants to buy, or rather she wants to buy Siemens. Gaurang, what will your view be on Siemens and the entire capital goods space, if you can share your views?
Well, so, the space is very, very exciting. Both capital goods engineering, the team, our research team has coverage on. As a disclosure, we have a buy recommendation on Siemens. Other than that, ABB, L&T are some of the other names. KEC International among the small stroke mid-cap names in the cap goods engineering space. But one thing I want to make absolutely clear is that when you are, when you choose cap goods engineering, when you choose power, when you choose defense as a sector to invest, please have an extended time horizon, because these companies take time to perform and deliver on the earnings, and then that reflecting on the stock price. These companies have a decent order book. Execution is something which is very, very challenging because of the complexities in terms of high technology and precision. So yes, it's a good stock to invest from a long-term point of view. We have a buy recommendation on Siemens.
All right, buy recommendation coming on Siemens, but more on the other side. Slip into a short break. Don't go anywhere. We'll be right back.
पैसा लगाना है तो Century Prime Club Prime पे लगा.
Then coming to you, Kunal, this is Renuka Thomas is writing from Trivandrum. She's holding 280 shares of Cochin Shipyard, and she's already sitting at a profit of 40%. She wants to know if she should sell this or hold on for a further upside.
I think book profits over here from a short term and then look to buy this back again on dips. As I was mentioning earlier, that many of the counters which have run up exceedingly high, there could be a sector rotation which could be at play. This could be maybe a multi-week opportunity for the sectors where you might see these stocks going into a mild bit of a correction. And since you're sitting on a 40% profits, I think it makes a lot of sense. Now, whether you want to book partial profits or full profits, that depends on your individual risk appetite. But I would suggest that booking some profits over here could be advisable for the stock, and then look to buy back on dips. So even if there is, for example, a 5% to 10% drop from their respective swing highs for these names, that could be a good zone where you can look to start nibbling into the stocks again.
Okay, so that's the view on Cochin Shipyard. We have discussed a whole host of shipping and defense stocks on the show today. But we have Nishan, who has written to us from Bangalore. He says he's a big fan of both Kunal and Gaurang. His question is to Kunal in particular. He's asking whether it is the right time to enter Canara Bank. If not, any other banking sector which he can invest with a 6-month time horizon. So your view, Kunal, on Canara Bank and other PSU banking stocks?
Thank you so much for that. On the PSU banking name, I will be very bullish on the counters at current levels, and I think I just highlighting some time back in the previous couple of queries that PSU banking space could be another space which could start to look extremely attractive. And given the way many of these PSU banks have been performing over the last 3-4 years, as well as the last maybe couple of weeks, there seems to be a case where the momentum as well as the zing is coming back for the PSU counters. So Canara Bank, Bank of India, you can look at counters like PNB, the mid-cap end of the PSU banking names, Union Bank, Indian Bank. Many of these stocks I think would start to look extremely attractive. So there will be a phase where these stocks may run up very fast, and maybe on a very swifter note, but then you'll have to try and strategize that how do you want to capitalize on the uptrend, as well as look to buy the expected quantity which you are looking to allocate into these counters. But PSU banks is where I would believe that the next set of bullish momentum should begin.
All right, that's the view coming in for Canara Bank. But moving on to the next question, this is coming from Narayan, who's writing in from Vizag. He says, great to see the dream team of Gaurang and Kunal. He has profited greatly from your judicious advice. So congratulations to both of you. He wants to know a few suggestions for investing in companies that will be benefiting from the AI revolution. Gaurang, I wanted to take this question. AI revolution, that companies that are likely to benefit.
Well, so IT sector remains in the spotlight as far as our team is concerned, and even after the verbatim post the third quarter, fourth quarter earnings last financial year, and of course the statement made with respect to the problem here is that the world needs to realize that we need to have a framework in terms of using AI. If you use it wisely, then it's a blessing. But if you use it otherwise, then it's going to be a curse. However, having said that, I think most of the leading top IT companies, including some mid-cap IT companies, have done a lot of initiatives, efforts to blend AI along with the kind of products and platforms that they're offering. I don't have any specific names, but like I mentioned, while you asked me a question on Coforge, then I think frontline IT names like TCS, HCL Tech, Infosys, which is under the coverage of our research team. Along with that, some mid-cap IT names like Coforge I mentioned, Persistent System is the other one. KPIT Tech also is the small to mid-cap IT stocks on which our team is positive.
Okay, so that's the view on AI and how it will impact the IT sector. But shifting focus from IT to real estate then, especially after the run-up that we've seen on Friday, we have Parul Kasliwal, who has written to us from Dubai, UAE. She has a question on DLF. She's holding about 100 shares at the rate of 782 rupees per share. She's asking whether we could see any further upside on DLF. Kunal, what will your view be? And I was just looking at the chart. The stock is up nearly 9% in the last 5 trading sessions, mostly driven by the move that we saw on Friday. But what do the charts suggest for this one?
Yeah, I think so. 10% for a monthly basis, 30% for a quarterly basis for DLF. But then I think that's not how you should be just looking at the stocks. Because I would believe that when a new trend begins for the stocks after weeks, months, or maybe quarters of price correction, you're bound to see the first move to be a lot more fierce, and then the stocks settle into a price range and then gradually start to trend higher. My sense is that with this news flow which you've seen for from the RBI, I think it's going to have a booster effect for many of the real estate stocks and counters over the next many weeks and many months. So I think if you're looking at a cumulative strategy over here, then I think DLF could be a good stock which you should continue to hold on at current levels. My sense is this stock should be able to cross back above levels of 950 to even 980 plus mark over the next 3 to 6 months.
960 to 980 mark for DLF in the next 6 months. But Kunal, let me come to you again on this, because this one's on AB Capital and you have been tracking the stock very, very closely. This is Snigdha who's writing from Delhi. She has bought it at she's bought 350 shares at 228 rupees. She's been holding it for 1 year already. She wants to know for future, for next 1 year, what would be your advice?
Yeah, I would definitely recommend to hold on to the stock. I've been tracking this very closely, and especially from the point when the stock was at 140 to 160, breaking out, moving towards the 240 to 46 mark, which was the high for AB Capital in 2024, and then dropped down back to that 180, 185 levels in this recent leg of correction. Now the stock is back again to that 240 plus mark. I believe that the stock should be able to surpass about the previous lifetime high levels and then go on into a multi-year uptrend. So I think it depends on your time horizon. If you're looking at this as just 1 year, then maybe you can expect another 15 to 20% upside into the stock price. But I would sense that there could be a possibility of even a multi-year uptrend riding into the stock.
Okay, so there is a possibility of multi-year uptrend. That's the view coming in on Aditya Birla Capital, and remember that is Kunal's favorite as well. But we have Ekambaria, who has written to us from Hyderabad. He's asking for a view on M&M at the current market price and also on L&T. Gaurang, what will your view be on both L&T and M&M?
Well, honestly, I think the gentleman has picked best of both the worlds. L&T, leading large cap company in the cap goods engineering, diversified businesses contributing to the balance sheet. Our team has a buy recommendation on L&T. Mahindra & Mahindra, again a company in the auto pack which looks very well placed in terms of future growth opportunities. But just again a caveat that I mentioned earlier for the auto industry is the short to medium term overhang in terms of curbs from China for rare earth magnets. That remains an unresolved story as of now, but yes, efforts are put in place. So on M&M also, from our research team, we have a buy recommendation. So both are great stocks to get invested, and I'm 100% sure that these two large cap names would be featuring on any of the large cap mutual fund scheme as well. So, and of course, earnings have been in line or better than expectation for both the companies.
So that's M&M and L&T, best of both the worlds. But moving on to the next question, this is Ignatius who's writing from Kolkata. He wants to know two stocks in the real estate sector and housing finance, of course, for obvious reasons after the decision on Friday, which he wants to invest in it with some stocks that are good on the fundamental levels as well as the technicals levels. Kunal, let me come to you first on the technicals. A stock from real estate sector and housing finance.
So I think DLF, of course, we mentioned this. That's something which looks attractive. You can look at either Godrej Properties or Oberoi Realty from the real estate pack. I think both of these stocks and the recent charts have been attractive. So you can pick out maybe one of the two names and then complete your pack of 42 stocks from the real estate. You can from the financial services name or the housing finance names, I would look at a couple of names. So for example, Bajaj Finance or Finserv, I think at current levels would look attractive from the large cap stocks. And if you want to add a mid-cap name, you can go for L&T Finance even at current levels of 190.
Okay, so that's the view coming in on Bajaj Finance. But we have Nagakumar who has written to us from Hyderabad, and this question is for Gaurang. He wants to invest about 10 lakh rupees in Tata Group companies with a time horizon of 4 to 5 years. He also says that he's inclined towards Tata Steel at the current price of 157. But any other preference from Tata Group stocks which you believe could be good long-term bets? Gaurang, this question is for you.
Really, and Tata Group is also known for the corporate governance and the standard that they withheld for the company. So yes, our fundamental team with respect to Tata Group, well, I'll start with TCS. He mentioned Tata Steel, that also is in the positive coverage. Tata Motors is the third stock. Tata Power would be the fourth stock that we are positive. And other than that, there are two more stocks as far as Tata Group companies are concerned. That is Tata Communication and Tata Chemicals. So I mean, 10 lakhs rupees, I think I have named 5 companies if I'm not mistaken. You can possibly, equally proportionately divide 10 lakhs into 2 lakhs, 5 parts, and then invest accordingly. But one more thing I would like to say, having an overexposure to a particular group company or a particular sector or in a particular company altogether, you end up exposing yourself to a higher risk. So you need to bear this particular point in mind.
All right, so moving on from Tata group of companies to the next question, Jay Krishnan writing from Kerala. He wants to know from Kunal what levels that he can buy Ultratech Cement for medium term. We have already spoken about Ultratech Cement, but quickly he wants to know the levels at which he could enter.
So I think buying on dips is a better strategy for Ultratech Cement. As of now, looking at the charts, I would suggest that maybe closer to 10,800, 11,000 mark would be a better level for you to buy Ultratech Cement.
Okay, so that's the view on Ultratech Cement, and we have discussed the entire sector and its fundamental view from Gaurang earlier in the show. But we have Mahalakshmi who has written to us from Hyderabad. She's holding about 2,000 shares of Bank of Maharashtra at 57 rupees per share and some 1,000 shares of IDFC First Bank as well. This question is for you, Gaurang. She wants to add more banking stocks to her portfolio. So Bank of Maharashtra and IDFC First Bank she already holds. Apart from these two, any other banking stock which you believe will be a good long-term bet?
Well, so again, sticking with the basics, of course, on Bank of Maharashtra, we don't cover, so I won't comment. IDFC Bank is an accumulate recommendation for IDFC First Bank. Other than that, I would agree with Kunal. Public sector banks looking extremely well poised in terms of future growth. Along with that, select few private sector banks. So if I have to name two from each, then State Bank of India and Indian Bank from the public sector bank. And from private sector banks, again, don't try to be adventurous. Stick to basics. Frontline names like HDFC Bank, Axis Bank, ICICI Banks are under our recommendation from the research team.
All right, with that, we've come to an end of question and answers. Kunal and Gaurang, thank you so much for taking the time out and joining us today on our show. But in a tragic incident, at least 5 people have died after passengers fell from a moving train in Maharashtra. The incident occurred around 9:30 a.m. Severe people have sustained injuries. They have been taken to the hospital. Times Network's Rucha has more updates from on.
तो सेंचुरी प्लाइस क्लब प्राइम पे लगाओ डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।